Has Nvidia silenced the AI bubble fears? This is Sectors Up Close, and we're talking AI. There's only one story in town this week. On Wednesday, Nvidia beat estimates when it reported $31.9 billion of profit for the quarter, 65% up on last year, and $51.2 billion in quarterly chip sales. That stock has gained about 39% so far this year, but it saw a wobble in recent days amid concerns that the scale of capital spending on AI won't be justified by profits. Melissa Otto is head of Visible Alpha research at S&P Global Market Intelligence. Melissa, do those chip sales justify Nvidia's valuation?
It's certainly been a whirlwind. It was a fantastic quarter, and the outlook came in about $2 billion better than Visible Alpha consensus. Now, the question is going to be next year, how does the profitability pan out? And will we really start to see an ROI on all this CapEx being spent?
Well, the numbers show that almost two-thirds of Nvidia's revenue comes from 4 companies, including customers like OpenAI, in which Nvidia has itself significantly invested. Should the market be worried about the circularity of those deals?
It's certainly an important issue, and it continues to evolve. We're watching the situation closely and really trying to understand how it's going to show up in the Visible Alpha consensus.
Well, Nvidia has also spent a lot of political capital in making chips specifically for China and negotiating with the US administration to be allowed to sell them. Then it reported that sales in China were insignificant. So how much is that a concern?
China is not even really part of the Visible Alpha consensus for this next quarter and going forward. So I think anything that comes to fruition from the trade negotiations would be an additional bonus at this stage.
Well, let's talk about the scale of CapEx. Nearly $400 billion is forecast to be spent by big tech on data centers this year. Is there a risk that revenue from AI applications just won't justify this level of infrastructure build-out?
It's possible, and at a certain point, shareholders may start to seriously question where the real return is on all of this investment and why so much so fast is merited. At the moment, it feels very much like the global cloud service providers are in an arms race, and it seems to be that they feel the need to really accelerate the pace of their investment in CapEx in order to carve out a critical part of the market fast.
How long have they got, though, do you think, before shareholders want to see more returns?
It's unclear at this stage. It really is.
So for Nvidia, can the chip maker continue to grow at this kind of level?
So far, so good. I can tell you, I've been running my model and the upward revisions analysis for the past 18 months. And I'm always thinking, wow, these continue to accelerate. Are we going to see a slowdown? Are we going to see Nvidia have a missed quarter at some stage? And they just keep on delivering. The company is just firing on all cylinders. The real question here is, what is the true total addressable market? It feels to me very much that the overall investment community continues to underestimate the size and magnitude of where demand really lies.
That was Melissa Otto of S&P Global Market Intelligence. Don't forget, you can watch more videos on Reuters.com.